following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, on a day where I may be willing to change my opinion of the markets out here. I have a feeling that maybe at lunch I came to a better understanding of what's happening, and we'll talk about that during this hour. To start the show, we've got the S&P up a little bit. It's up 6.5 points with 1.83 billion shares, so the volume is not all that exciting. We are going into a two-day meeting for the FOMC on Tuesday and Wednesday. I suspect that this market's going to slowly climb up to the all-time highs and basically put their nose right to Janet Yellen and say, who's going to blink first? So, we've got, of course, options expiration. We had a nice bounce yesterday. Volume was okay. Was it great? Did it signal a breakout? The answer is no. Do I think we can get one? And the answer is maybe. I think maybe for today, it was the way that the market reacted to Greece news yesterday, which was the excuse for it going higher. And then, of course, basically that all turned to dust today, and the market dropped 4 points on the S&P cash. And that was it. And the question is, which is telling us the true story? It's not so much about the news, about the way that the market reacts to the news. And my guess is that we basically had the everybody saying yesterday was all a big farce, and the market didn't react to it. It tells me that maybe there's something going on that I had not contemplated before, and I think maybe I have the answer. So we'll talk about that today. But it kind of came to me when I was looking at the market reacting to the announcement of basically the Greek news out here being highly optimistic yesterday. And it didn't have so much to do with that. I have a feeling they would have come up with another reason to drive this market higher if we would have seen yesterday, if they didn't find the Greek news. Maybe it would have come today. But it looks to me like the market is probably, you get to highs where the market just sits at highs, and eventually it'll break out. Doesn't mean that it's going to be a real breakout. Doesn't mean that we'll just come back into that trading range. But we've probably hung up here long enough that a lot of people are going to try to be pilgrims. Of course, pilgrims get the arrows, as they used to say. But as we're looking at this market and starting to sharpen it up, could we have yet one more move out here? And is there a fundamental reason why we could? And I think the answer is yes. And it's one of, I actually went to, in the daily newsletter, went to all cash today. And the reason why is I really don't have a bias. I had a big winner. I had a big loser. I had a medium winner for some trades and a lot of basically break evens. So maybe a little bit on the plus side. Over all the stuff that we went, a week ago Tuesday, all short. So we got in at pretty much the right time. Had one that probably, I should have probably taken off yesterday, but hindsight is 2020. I wanted to give it every opportunity because I hadn't seen anything that truly changed. What changed today, and Mr. Keynes said it best. He said, when the facts change, do you change your opinion, sir? And there's a corollary to that, and that is when most people are faced with facts, they get to working on how to disprove them all. It was pretty hard for me to basically look away from the way that this market reacted to that Greek news today. And I think that's probably forming what I think is happening out here. And the reason is for one of my big winners that we've been playing. We'll talk about that in a few minutes. it has shown something that makes me think, how can this sector ETF be doing so poorly? And we were short, actually long a reverse ETF. How can this one be moving so well and the rest of the market's out here doing nothing? And it finally came to me on an old story. So we'll go through that today. In the meantime, we'll be watching the closeout here, 21.12 on the S&P cash. If I was going to be bearish, not think that we retested the highs out here, I would have expected us to go back and retest 2100 fairly quickly this morning. We went higher. I didn't expect that. And we also were able to hold, we got down to 2106. But we were pretty much able to hold that 2108, which, if you've been listening to the show for a while, I've been looking at as the battleground. That it was able to hold that suggests that we'll at least go back and retest the highs. Could we still roll over before the end of the day? I think the answer is possibly, but I wouldn't bet on it. I'd rather take my cash out now and declare maybe a draw or a slight profit for all my positions than hang on to them any longer. As the old saying goes in the stock market, when in doubt, get out. And I don't have a abiding belief in any bias other than I think I know what's going to happen. But I think that there's a much better opportunity to make a profit when I have an abiding belief of the direction. And I don't have that. Probably won't have that until we get into the FOMC meeting and through it. And even then, there may be some other issues out here. But I think what is setting up from looking at options is, again, a really good opportunity next week on options, maybe Wednesday before the close or Thursday, for a big move in options on Thursdays and Fridays. And it may even be that right after that FOMC meeting, that's the time to put them on. But I'm seeing some quite a lot of divergence in stocks that are up on no volume. So there's maybe some opportunities for some puts. And I also see a lot of stocks, especially in the energy sector out here. While I'm not bullish on crude, I do see some other stocks that look like maybe they could bounce at least into the end of next week. And that may be a good end of week options play. So we're looking at those, and we'll be keeping an eye on everything else. In the meantime, I've got to get something up and going so I can play my little thing. And I forgot to do it here. I forgot to launch it. But here it goes.
Then it's all just a little bit of history repeating.
On this day in 1776, the Committee of Five to draft the Declaration of Independence was formed by, of course, Congress. And kind of interesting to see that there's very little business news out here today, which I try to focus on. But a lot of interesting things did happen today. In 1955, the tragedy at Le Mans happened. If you've never seen the video footage, this is where a car doing about 150 miles an hour takes off, goes right into the stands, kills 82 people, including the driver of the car, who got tagged by somebody going into the pits. And a lot of places in Europe basically banned racing. In fact, racing is still illegal in Switzerland, believe it or not. John Wayne died this day in 1979. He'd completed his last movie about a year and a half or 2 years before, about a man dying of cancer. And he was, at that time, dying of cancer. So it didn't have to go too far to act on that way. In 1986, today, we had Ferris Bueller's Day Off was released in theaters. Always loved that movie, especially the part where he gets on the float and sings. Is there a better part of a feel-good movie? Chris Columbus made some incredibly wonderful movies, and that is probably one of the better ones out there. In 1989, China issued warrants for the Tiananmen Square dissident who stood in front of the tank. You know, I never heard what happened to him. Is he still around? Did they catch him? I'll have to look that up later. Anyway, a lot of news happening today for what is a fairly quiet day. If you've been watching TV today, Facebook is out pushing its Oculus Rift virtual reality headset. It's kind of interesting to see that this thing comes in at $1,500, and I suspect that maybe this is, while very interesting technology, just too expensive to get going at this point. I wonder if they really suspect that they're going to sell a lot, or it's just some whiz-bang stuff to talk about to keep investors off their back, like they're not coming up with anything new. We continue to look and see what comes out from other people. Google Glass has kind of wandered off. We also have the HoloLens from Microsoft, which to me, if this truly is going to be $500, seems to be a better product that might find mass market acceptance. Either way, Microsoft is making Oculus Rift a huge priority in making sure it works with Windows. There is a huge component of Windows 10 that will have virtual reality as a core part of the operating system. And if you have a product that you can hook up to Windows, or Windows is more than, and Microsoft's more than willing to hang on to it. But if you haven't seen this, basically it's one of those giant things that looks like a helmet, and you turn your head and everything moves. The question is just $1,500. This seems to me, once you get past $999, I'm suspecting that the market at $1,500 is probably 1/4 of what it is at $1,000, and probably 1/10 of what it is at $500. So I'm wondering if Microsoft's product is not the way to go. We talked a lot about Intel getting involved with Altera, about a lot of interesting technology incorporating its programmable logic on a chip. I suspect that many of these customers out there, including Microsoft with their HoloLens, Facebook with Oculus Rift, that are going to be big users of that. And if it takes off, I think it's probably big money for Intel. There's nobody else really doing anything like it. And if everything has to be small and everything has to be put into a single small chip that uses very little power, it seems to me these devices in the future are right up Intel's bailiwick, and I don't see Samsung or anybody else coming out there. Oh, yeah. Bueller. Ben Stein. What a great guy. Anyway, a lot of people, good people in that movie, but just a feel-good movie. Not a lot of those left. And, of course, Christopher Columbus, the guy that made that movie, and a bunch of others, passed away a while ago. So we won't see any more of those. Still a great movie. Anytime it comes on cable, it's hard to not watch some of it or till the end of it. I don't sit down to watch it. Anyway, we'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, we were looking at Oculus Rift. They have a new input device. We'll talk about that tomorrow on the Tech Insider with Tom O'Brien at 4 o'clock. But other than that, kind of quiet on the Western Front. Of course, today, the most interesting thing that happened to me, normally it's just watching the movement of different things into, if both of them go up, if one of them goes up, the other one goes down. Basically, the inner action of different ETFs as we trade throughout the day. And I thought probably the most interesting thing today was just before lunch, before noon anyway, Eastern time, they came on and I think it was already well understood that there was no way that the Greeks were making a deal and that was all BS yesterday. But the market basically came down from about 2012 to 2008 on the S&P cash on the news, and then it's recovered since then. Not a huge move on it. But, of course, that was the reason it was all up yesterday, so probably should have given it all back if that was it. But I kind of thought of a different scenario out here. And why would the S&P stay up, even if things go bad in Greece? Of course, the dollar will go up, which is worse. But at just the beginning, anyway, the rabid, almost almost perverse way money is chasing around and grabbing anything that can make it a dime on the long side is very interesting. So anyway, we saw that movement. I I continued to see the third world markets continue to move down. In fact, that was my big trade out here. We were long the EDZ, which is a triple short the emerging markets. We started playing that, I think, at 24.50, bought it, went up, sold it, came back, bought it again, and I think we got into it for around 28 and changed this time and out just under 32. But it held up incredibly well today. It didn't even blink and act like we were going to have any huge pullback in it. And I started to think, you know, things probably not going to go well for Europe. We will probably see a lot more headaches before long. But if everybody went over there in Europe to cash in, what happens when they cash out? And my guess is they're not going to want to go into third world markets. Hence, third world markets continue to fall abruptly. China, well, not that bad. One of my small winners out here, we were short them on the pullback and made a few bucks on that. But it's the idea that you can really have movement that was only basically chasing any kind of place where you can make a dime. And if Europe fails, and it probably will from the prospect of Greece out here, does it make sense that people will leave Europe and either go to probably China, which is in a giant bubble now, the riskiest of all moves? Maybe they do, and it pushes China even higher. Or would it be back here to the United States? And that may only last a while until we can get and catch the disease that Europe has. And that is, as they pull apart, their currency gets cheaper, they get a little bit better, but of course our currency gets more expensive and profits go down. So the U.S. markets go down. And you can't go into China because, of course, I guess you could, but you'd have to be, I think, you almost have to be suicidal, I think, to buy China stocks right now, knowing that you have basically a beanie baby and nothing backing it, nor the ability to do anything to the government if they just decide to take all your cash, which I think is eventually what's going to happen. One day they're just going to wake up and go, nah, 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 and all your cash will be gone. And, of course, there will be those known as suckers. In the meantime, people will say, hey, we're making lots of money, and that's always the way it works in the market until you get clubbed. But could we see a big breakout here in the S&P on one thing? And that is, as people see the EU start to dissolve, cash comes out of that country, out of that area anyway, and moves into maybe the only safe thing. At least everything isn't going to be gone tomorrow. You may have to sell into a declining market. But if you've got to make cash, is the United States the last place that you can go? Anyway, we'll talk about this a little bit more and look at a few other things moving out here, get into financials. Everybody's telling everybody how they're going to the moon today on financial infotainment. So we'll check that out too. Be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, I had an email from Dave in Oklahoma, asked me what I think of iDreamSky. It's, first of all, a Chinese stock, so I would never touch it. Got some decent volume out here today. Unfortunately, fortunately, I looked through its books out here, and there's nothing out here to really tell you what these guys are doing in the way of business. They are a mobile games player in China. And I guess if they had good games, that's it. The problem is they're not outside of China. You really don't have much in the way of filings here in the United States. I don't know how you can say whether this company was doing billions or tens of dollars in business. It's got, it basically goes through some other companies out here that supposedly sell their products. But again, there's absolutely no way to tell whether anything's real or not, especially in a company like this. If you buy the shares of this company, this is another company that you don't own if you buy shares of it. All you have is a holding company of a company that owns iDreamSky. There's a reason for all this stuff, and it ends up being one day who's left without the chair when the music stops. If you're in this thing when it does, or any of these other China stocks, God help you. But, you know, I guess to me, it's the difference between speculating intelligently and gambling. And to me, these China stocks are nothing but gambling vehicles, since there's nothing that underlies them. And there's no way to know whether or not they're telling the truth. And our government doesn't care. So, I don't know. Buyer beware. What else did we have going on out here? I was going to go to something else. Oh, wanted to go to BAC. Check back in. We were talking about this setting up a Gartley pattern. Certainly looks like it continuing. The only thing is I kind of dislike that this last arm out here took so long to come up, but not uncommon, just drawn out. But the energy on this way up is still nothing. You went to a higher high today, pulled back. Everybody, of course, on the financial infotainment shows are doing nothing but telling everybody that the XLF has to go higher. You completed a bearish butterfly today. 25 to 21 was the projection. You got a doji out here on it. It's a small one, and again, not very symmetrical. But at this point, you have to look and see, does this thing go higher? And I just look at, let's take a quick look at Wells Fargo again, because everybody's talking about these. This thing's in a slow uptrend. Do you really see much of anything out here? Higher today, about half the volume of yesterday. 18.6 million shares yesterday, 8.7 million shares. You know, it's tough for me to say that you'd want to be short this today, but certainly I can't see being long any of these. Could they dribble on up a little bit higher? The answer is yes, especially into the FOMC meeting. They've got everybody on one side of the boat, though, and that's what I hate. None of these really look that strong, and that is the problem out here. You should have had a sign of strength from Wells Fargo as it went through $56.29, and you didn't have it. And that almost always leads to some kind of pullback back into the trading range. And, you know, if you were short at 56.5, maybe you're out at $1 loss, but that's nothing. I just, as long as it holds above 56.29, or 55.94, which would be the more conservative thing, you have to say that this thing has problems, but you need a sign of strength, and you have one more day to do it. So keep an eye on that. Gold was off a little bit earlier today. I didn't see. I think it was down about 0.5%. 1880, I think, is the last tick I saw. We continue to see stocks out here. Yamana had been hanging around these lows. I'd been looking at it, but it hadn't gotten any signal out here that would make me think that I wanted to pick it up. But it was kind of looking very interesting. We brought this up yesterday. The March 11th low was $3.33, 13 million shares. I wanted to see this thing come in with lighter volume. 2 days ago, 9.3 million. Yesterday is what I was thinking. Maybe we've got it. This thing has 4.7 million shares. I still would have wanted to see this thing go sideways for 7 or 10 days just and see the volume really fall out. Interest also. It did not. Volume did pick up today. It is breaking that previous low. We are going to have more volume than that March 11th low also. So a lot of these gold stocks continue to kind of wither on the vine if they aren't of the highest quality. Let's put it that way. The juniors, which I've always been skeptical of, look like they have made a bottom or made a top. JDST. I almost bought this at $7 here a day ago, but I just didn't see a lot of impotence either on the way down or the way up. If you're really talking about tight trading ranges, this is exactly what you're getting on these junior gold miners. This thing has just gone really sideways since the 26th of May out here without a lot of impotence. One thing you just like, at least on this side, if you are going short, is that you don't have a lot of energy in it. And my guess is that we probably don't have a movement in gold of significance until we get to that FOMC meeting and through it. If there doesn't look like it's inflationary, it looks like gold would probably at least try that 1870 level to break it again, 1865 excuse me, 1865, 1180 and 1165. But just not a lot to hang your hat on out here, and still don't like it. A few other stocks of interest out here. Broadsoft, some of these stocks up here with very light volume. I think we brought this up yesterday. BSFT is Broadsoft. This spiked into it yesterday with 500,000 shares compared to the May 14th high of 2.2 million shares. Just a big trading range between about 39, let's call it 38 and a half, back to 32.75, maybe 33 bucks. So if you're looking for some of these in trading ranges, take a look at that. One that is breaking higher today, but a no volume, is Dollar General. This thing is trying to break out once again. April 27th, this hit $76.99. It did so with 5.4 million shares. Yesterday, we had 2.7 million shares. Today, 1.7 million shares. So again, not a lot of juice on these highs, but my guess is that we could hang out in this range between probably 21.10 and 21.30 through the FOMC meeting, and my guess is that they'll try to jack this up into the announcement and assume that Yellen will blink. And I don't know what else you could say other than that she's too scared to pull the trigger. Probably be a good movement for gold if she is, by the way. So probably I am thinking that if there is a move out of gold to be had, probably Wednesday after the FOMC meeting. These energy companies, we've talked about these ad nauseum yesterday. Not all that bad looking again. Of course, crude was at around 60 bucks today, so there wasn't a whole lot going on. We've got this low for March 13th in DPM at $35.10 with 560,000 shares. Yesterday, as we went into that, 345,000 shares today, 33,000 shares so far. But it looks like this thing didn't have any juice and kind of gave up the ghost when we look at selling. Another one up here at highs is Ellie Mae. This company makes, if I'm not mistaken, software for the residential mortgage industry. And I continue to see bits and pieces of a theme, and that is that housing has hit a high. Not that I'm shorting it, just that housing has hit a high. There doesn't seem to be a lot of reason to be jumping on top of these, as they'll probably have a slow and sure pullback. ELLI is the symbol on this one if you've not heard of it. Anyway, spiked through the high yesterday with 1/4 of volume, doing sideways action out here again. You know, this thing probably looks like it's coming back around to that mid $57 level where it had its previous low, where it spiked back into this gap down. Didn't have any volume, went right back up here to the top. But again, 1/4 of the volume of that sign of strength on May 1st out here. So I'm going to be watching these and see how they react over the next few days. MCore Group, another one up here, very light volume, not a big volume stock to begin with, but you were looking for 400,000 shares yesterday. You had 228. You got 69,000 today, and it's kind of trying to come back into that trading range. Not a huge trading range, but back down to $43.74, which is the April 30th swing out here on kind of a big day. In the biotech stock arena, we've got a few of these testing highs on lighter volume. I think we brought this one up too yesterday. March 19th, $13.20 with 21 million shares. Got into that yesterday on a doji with 1.9 million shares. Gap down, just trying to come back up here, but 1.6 million shares. Certainly looks like that sign of strength will be tough to get through from March 19th. Gilead, another one up here, turtling and peaking at highs. Let's take a look at this guy. You know, what you wanted to see was this move through 116.83, which was the October 31st, 2014 high. You had 22 million shares on that day. You came through it yesterday on 11.9. Let's call it 12 million shares today on 8. We have gone above it, and we are staying above it. But there isn't, again, a lot of juice on these highs. But it looks like it will close higher. HCLP, High Crescent Partners, down here on a low. And we've been talking about these energy stocks. January 6th, it's hit $28.23 on 750,000 shares. Really had been breaking through the December 1st low of 2014 that had 1.8 million shares at $30.21. So you can look at this as all one big false breakdown of those levels that basically came back into the trading range up to April 16th. The energy was okay. Unfortunately, he had more selling and more energy come back in from that April 16th high back into the June 5th low. We've been kind of coming back up into that trading range. And today, as we look at it, we are just under that 30.51 from that first big move down on the high volume that set up what is going to be the support resistance level. You need to close above that level. 184,000 shares looks like a pretty good test of 1.8 million shares. So I'm not exactly sure what's happening on energy. I don't think the crude is going up. Certainly doesn't look like it. Looks like in a range between $62 and $53, maybe $55. And problematic. Breaking out is Lincoln National Corporation, LNC. But again, we wanted to see a sign of strength. Yesterday, 2.8 million shares, which I think can qualify that. Actually, fairly decent volume for this stock. And in the market, 1.7 million shares today. Basically, you had a resistance level set up by the December 23rd, 2014 high at $59.17. Got back into it, been testing it. And it really, you got 1.7 against 1.1. So you do have a valid day. The candle was pretty good yesterday. Got to follow through today. So keep an eye on that one. Let's take a quick look at what this one does. Multiple insurance and retirement business in the United States. Lincoln National. Okay. Other stocks of interest. Magnum Hunter, excuse me. Keep on thinking of this one. Magnum Hunter Resources, another one of these energy stocks out here on very light volume. It's broken through that 160 low from January 22nd with 11 million shares. But volume's been fairly light. Even yesterday, you had 5.5 million shares. So some of these stocks may be setting up for a rebound next week. If you heard the beginning of the show, I've gone to all cash, but I suspect that maybe we've got a nice move setting up for expiration next Wednesday, and I suspect that I will remain all cash into the FOMC meeting now. And we have, what do you have out here? You have some light volume down, but some of these dollar stocks may be a good alternative also to playing the options on. In the meantime, give me a call, 877-927-6648. Email me, path@tfnn.com. And, of course, you can always post a message in the den. When we get back, we're going to look at a couple other stocks out here. PRTA is the next one up. Then we're going to look at Sohu. A couple of these stocks looking kind of interesting in the biotech sector, too, on fairly light volume. We'll be back in a minute.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're out here at 21.10 and change. Not much happening. Quiet, just over 2 billion shares. We did have another request, and that is Larry from Detroit. And and he's got a nice message for me. But he's asking about the bulk shippers out here, specifically Diana. And the first thing you should do, of course, is look at the Baltic Dry Index. It is a price chart of how the different kind of bulk shipping is priced these days. I'm showing it on Tiger TV at the moment, and I'm going to email Larry back a link so he can always have it from now on. But first thing you should do is look at these moves. And as far as you can tell, this thing really, it came off a cliff. It's about half the price that it was back in November. Doesn't really look like it did a lot. I would like to see it probably come back and test its previous lows, which are around 550 on the Baltic Dry Index. It's at 618 today. It was up about 1%. So things getting a little bit better. You know, when they fall off a cliff, you can bounce a bit, and it doesn't seem, you know, it may seem like a huge amount. Probably was off 550, but it's still not driving a lot of companies in the bulk shippers out here. But let me do this real quick, if I can find it. Reply. There we go. So I'm going to email him that link. Oop, that's not the link I want. These are not the droids I want. While I'm doing it, I will think about it. And then we'll go to the chart here for Diana Shipping. This thing gapped up on some decent volume, sold off as it came back through there. And it is, what can you say, 6.8. Just, you know, you had a bounce, but is it more than anything just a little market gas or reality? Until you start seeing the Baltic Dry Index out here really do something, tough. But what you would probably like to see is a retest the $6.31 low out here on light volume and maybe pick it up there. But I think this gap is probably going to get filled unless we start seeing that Baltic Dry Index actually expand. You know, when your prices for bulk goods drops in half, the ability to make money probably doesn't exist in the shipping industry. So does this mean that they're going out of business less fast or going broke less fast so they bounce? A lot of times that's the way that these things work. But I continue to think that it is problematic at best. I want to see some kind of sign of strength in the Baltic Dry Index out there, and just haven't seen it. We've always seen so far as a light dead cat bounce out of it. Sohu.com, this is one of the internet companies in China. The April 27th high, $69.79, 1.4 million shares. Got into it 4 days ago with 1.1 million shares. Just been kind of going sideways out here. Tried to get in and above 70 again today. Peaked back down. Volume picking up a little out here, but very tough to figure out. Taser, another one up here. Kind of looks like maybe these stocks that were all based on the riots of the spring may have come to an end. Very light volume going against the 6 million share high of May 2nd, $35, actually 6.2 million shares. Into it with a 2.1 million shares today, so keep an eye on Taser. In the meantime, so when you can, not when you have to. And as always, we'll be here tomorrow, same bat channel, same bat time. Hang on for Tom O'Brien over most of TFNN.com. And, and Andy at 5.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.